I would say that I'm well content about the gold price. Obviously, breaking through this resistance on silver was important. I thought it had another great day today. It was dragged down earlier this morning with some significant gold selling, popped right back up. I think shorts, if they are what many people think that are out there, they got a huge problem. They won't be able to wait too much longer. And it may take a psychological number being broken, which would be 40. It's just a round number, but it would be psychological. And we could see that ultimate squeeze that a lot of people have felt all along. But constructively, gold and silver still look like they want to go a lot higher. And there doesn't seem to be any real concerns of major downside.
The silver market is approaching a pivotal moment, characterized by a widening disconnect between the physical and paper markets. On July 11th, a staggering 483 million ounces of silver were sold short in just 1 hour on the COMEX, an amount equal to roughly 57% of global annual mine production. This extraordinary move was aimed at suppressing a bullish breakout. However, the attempt failed. Prices quickly rebounded above $37.50 an ounce, leaving the short sellers deep in the red. With the physical silver market already under pressure from tight supply, those behind the shorting may now be forced to cover their positions at much higher prices. Analyst Peter Grandich sees this breakout as highly significant. Silver's ability to rebound even on days when gold faces downward pressure signals that the short sellers could be facing serious trouble. If silver breaches the psychologically critical $40 mark, it could trigger a massive short squeeze, rapidly accelerating prices. Silver has already surged more than 35% since January, following a 21% increase in 2024. Some forecasts are now targeting highs of $45 to $48 an ounce. Grandich remains bullish on both silver and gold, anticipating only moderate corrections in the 5 to 10% range. At the same time, analysts at Commerzbank note that sharp price increases in silver, platinum, and other precious metals indicate that investors are rotating out of gold in search of better upside. Gold, up nearly 27% year-to-date, mainly during the early part of 2025, has entered a period of consolidation. Grandich welcomes this stability, noting that if gold trades sideways around $3,300 into Labor Day, it would lay the groundwork for a strong rally toward $4,000 or even $5,000. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
But when it broke under 30 earlier this year, and then I look at the tremendous, clearly minimum short position, whether it's manipulated short or just people who don't believe it's going higher than that, and the industrial use, and then the ratio got so out of whack with gold that I became a silver bug. And I said, quite frankly, it could lead gold for a while. So I still see them as, close in terms of favorability. There's no dramatic difference as I used to see, always putting gold ahead of silver. I think silver will not be able to rally a lot without gold going up, and that could cause it to drag up. I do think gold has traded just admirably. Now, remember when it got near 3,500, I said I actually took profits in it because I thought it ran far, and it got something that almost always is a surefire signal. The percentage above its 200-day moving average was at a record high. And I felt that suggested that it's going to either take time for the average to catch up, or gold was going to have to go down a lot, maybe as far as 3,000, because the 200-day moving average at that time was 2,700 and change. It's now over 3,000, that 200-day moving average. And in a couple more weeks, it'll move up even faster because some of the higher prices of gold will impact that average now. So I'm okay if we go through, and I know traders don't want to hear this, but if we went through Labor Day and we were still talking about gold on either side of 3,300, I'm fine, because if you're a 4,000 or 5,000 or even higher believer, the longer we consolidate here and that averages and overbought and this get worked out and things of that nature, the better foundation it will be to get to those numbers. So I would say that I'm well content about the gold price. Obviously, breaking through this resistance on silver was important. I thought it had another great day today. It was dragged down earlier this morning with some significant gold selling, popped right back up. I think shorts, if they are what many people think that are out there, they got a huge problem. They won't be able to wait too much longer, and it may take a psychological number being broken, which would be 40. It's just a round number, but it would be psychological. And we could see that ultimate squeeze that a lot of people have felt all along. But constructively, gold and silver still look like they want to go a lot higher, and there doesn't seem to be any real concerns of major downside other than, 5 to 10%, pullbacks. Well, I don't always know if institutions are called smart money because several Nobel laureates did studies over the last couple of decades and found that 80% of active money managers underperform the simple performance of the S&P 500. So we may give too much credit to the average institutional person, but you are right that institutionals are significant major net sellers of general equities and now corporate insiders as well. And it's the general public that is reaching levels not seen in years, if not ever, on how much its own ownership of stocks. And of course, the lower echelon of stocks, lower price, are moving and, doubling and tripling in a matter of weeks. And historically, that has always happened at the end of a bull run and all. So it is concerning, and it's interesting that normally you would have expected, with the stock market remaining strong, that gold would not be able to hold the huge gains that it made. I think that's another credit you just got to give the gold that in all of this, it's hanging here. And I think it's hanging here because it realizes chances are that's not going to last in the stocks. And eventually a serious correction, if not a bear market, will entail. And as long as it's not a collapse, because remember, in a collapse, people think of liquidity. They're not talking the stories about gold and BRICS or anything. I need to sell something in order to get my house in order. And, gold could be sold then. But other than that, the stock market peaking and rolling over will be just another bullish factor for gold. I think one of the happiest people in the world right now, who's ever the director of new membership for the BRICS, because everything that's playing out in their arguments why you should join the BRICS since Trump has taken presidency points more and more. Yeah, they weren't household names that joined, but we saw several more countries join. We also, I talked with Andy Schectman of Miles Franklin today. He brought up so many excellent points on what's developing behind the scenes, and China can wait out Trump, and meanwhile it's maneuvering and doing certain things. And I think it's going to come back to bite them. And again, remember, the formation of the BRICS, believing why these central banks were acquiring so much gold, and by the way, they're continuing nonstop, was the reason why I got out of stocks and bonds and bought gold for capital appreciation, and that worked out fine. I just think, I tell the story. It wasn't too long ago, a couple of months ago, when I was asked to speak to a brokerage group that my friend owns, and I think every financial advisor in that room was under 40 years old, and I'm sitting at the table, and they don't know yet that I'm the speaker, and my friend is about to introduce the speaker, and he says, our next speaker is also going to talk about the BRICS. And one of the financial advisors next to me leaned over to the other guy, is he going to talk about the housing industry? I mean, I don't think everybody's that way, but I don't think there's a lot of knowledge in the financial service industry understanding what the BRICS are and what impacts it's going to have, not just geopolitically, but economically. And therefore, again, I'm a big believer in, I think they've had another great year. They're smart enough not to get into a war of words. You cannot beat Trump in a war of words. The guy doesn't care what you say, who says it. He's going to say, he's going to be as he can get very nasty, quite frankly, at times. And if you turn on him or don't longer support him, I mean, that's it. And of course, he said he's going to break the kneecaps and all this other stuff, but they're moving forward. And I think again, that's another one of the many bullish reasons for the gold market to work its way higher.
The US dollar edged lower on Friday but managed to retain gains for the week as investors assessed the emerging impact of tariffs on inflation and speculated over the Federal Reserve's next policy move. Market attention also remained focused on the growing tension between President Donald Trump and Fed Chair Jerome Powell, which could influence the central bank's path forward. Earlier in the week, inflation data painted a mixed picture. Consumer prices rose in June at a moderate pace, while producer prices held steady, suggesting inflation is not accelerating rapidly, at least for now. However, Thursday's economic data offered a surprise upside, with U.S. retail sales jumping 0.6% in June. This stronger than anticipated reading provided a temporary boost to the dollar, reinforcing expectations that the U.S. economy remains resilient. Despite the dollar's bounce, veteran analyst Peter Grandich highlighted the broader trend. The dollar experienced its worst six-month performance ever in the first half of the year, and the current strength appears to be a typical counter-trend rally. What stands out, Grandich notes, is gold's resilience in the face of this temporary dollar rebound. Typically, a stronger dollar weighs on gold prices, but that hasn't been the case. Gold is holding firm, a signal of underlying strength that Grandich views as distinctly bullish. Let's get back to the interview.
The dollar was extremely oversold. It's going through a counter-trend rally, which I talked about a week or two ago to my followers that expect that. But it had its worst 6 months ever in the first half of this year. And even in the face of this counter-trend rally, gold more than holds its own. So I just think that he has 30 to 60 days more. But if we get into September and he still can't point to one of the top 3 or 5 countries in the world of a substantial inked trade deal, one of the things that I heard I thought was very interesting from an advisor to the Middle East, Saudis and all, he was just over there and they were the best of friends, said, who knows, even if you make a deal with Trump, is it going to be a deal tomorrow? And so I think, like I said, he's losing his punch and his effectiveness. And I know there's a hardcore. I live with one. But the bottom line is I think more and more people are going to concern. And these outside incidents, the Epstein, the Powell, some other things that may come up here and all. So for a lot of years, especially when I was a fund manager, platinum always traded at a premium of gold. That's why it was a platinum card was better than a gold card. COMEX, now, of course, from that respect, that changed. I don't look at platinum like I once did 20 or so years ago, so I wouldn't be a good expert on it, other than I think what people realized is it got so cheap compared to gold and palladium. When silver shot up that day on its record day up, palladium actually went up more percentage that day than even silver. So I think they're making up for a loss, but I don't follow it well enough. It was always a metal that really was only come out of 2 or 3 places. Many of most of those places people were concerned about, especially now from South Africa and of course Russia. There may be some concern about supply demand. I don't know. The big driver that used to be was the Cadillac converters in cars. I'm not a good person, Elijah, to say other than I think that it's just part of the whole metals complex moving higher. This is where I get a lot of the Magna people angry. I'm not a Magna person, but I'm not a Trump hater either. I live with a Trump lover. If he comes on, she'll run in and watch him on TV and not even think about what she was speaking to me, my wife. But I do think he's made a serious misjudgment. And first of all, he's done some really good things. The immigration thing, another 4 years of how it was, the country would have been totally ruined. Not that it's not going to be eventually, but he at least curtailed that end. He's brought some sanity back to things. He's taking money away from places that were extremely biased, like, this NPR stuff and all. But on the trade war, my comment is simple. He brought a big stick to it when he should have brought an olive branch. America is not the power that it was 30 or 40 or 50 years ago. And you can say all you want about make America great again and all, but it's not the country it was. It's not received in the manner that it was 30 or 40 years ago. The BRICS would have never gotten off the ground and continue to grow if it was where everybody wanted to deal with it and all. China is an extremely formidable opponent. I put out a video a couple of nights ago just demonstrating why I think that's true. And so I think he made an error. Now, he still has the momentum from his election and the group and stock market. The don't worry, be happy crowd that make up much of the financial service industry, I like to joke that you can throw them off the Empire State Building all the way down. They'll all say, hey, so far, so good. They'll like anybody and anything that makes the stock market go up. So they're all for, and supporting this stuff and all. But I will tell you this, I think it's going to come back to bite America in a very big way. And one of the things that's showing up now is, and he's given this name of taco, and, that Trump, says one thing and then he switches. I don't think he has that much more time until he gets to the point of, hey, they didn't come running to our feet. Elijah, I would just tell your viewers, just go and watch what he was saying weeks before his coronation and then during the coronation and inauguration and up to April 2nd, what he predicted that the world was going to do. They haven't done it. They haven't come running to make deals. In fact, there's nothing of major significance as we approach already now past the middle of July. I think what will transpire is he will take a lot off, settle on a much lower number, and still say that's really good for us. We know we're the greatest country, and all this other type of stuff and all, because he cannot point to anything at this point in time. And it's been pushed. Remember, it was going to be July, and now it's August. And who knows, come August 1st, they'll push it again and say, well, we're going to give you to X, Y, Z. But I think it's a net negative long term, and the positives from it and the spin that they're getting out of it is going to deteriorate. And one of the ways it's going to deteriorate is he's losing some support from other issues. The Powell issue, one much bigger than that is the Epstein issue. There are a lot of people who are major supporters, including that woman that sits in that other room, who were, and we all know what's transpired. I think he's losing some of the political chips, and here's why I believe that's important. Our election now, a few months away from November, as soon as this election is over, they'll focus everything on the congressional election in November 2026. And guys that were Republicans or supporters of MAGA who might have stood right next to him may not stand as close or even stand there at all. So his time is running short to really prove that this is the formula and the way to go. Talk is going to get cheap eventually, and eventually that'll show up in the stock market as well.
In a market increasingly shaped by aggressive positioning and fragile narratives, silver is making a defiant stand. A coordinated surge in paper shorts failed to suppress momentum, and instead may have lit the fuse on a potential reversal that could ricochet through the entire precious metals complex. Meanwhile, gold's ability to absorb a firmer dollar without buckling underscores a deeper resilience that defies traditional correlations. Investors are no longer merely chasing returns. They're responding to a system that is flashing warning signs across debt, currency, and credibility. As volatility brews beneath surface stability, smart capital seems to be moving in silence, gravitating toward assets that retain their form when policy loses shape. Is this rare show of strength across metals the opening act of a larger unwinding, one where market control slips from the speculative to the tangible? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.